like. So just to begin, it'd be good to hear from Arisa about what Cega's doing, and then we'll hear from Terry and Andrei next.
Yeah, awesome. Hello.
Is it?
Hello. Awesome. Hi everyone, thanks for watching this panel today. My name is Arisa, I'm co-founder and CEO of Cega Finance. We're a DeFi options protocol on Ethereum, Arbitrum, and Solana, and we're one of the leading protocols in this entire industry. Recently we've hit a really exciting milestone of $500 million of volume, and we have had one of the largest TVLs in the industry for the last 2.5 years that we've been live. We build structured investment strategies that you can connect your wallet to and stake into in just 3 clicks. And super excited to announce today that we are actually building some exciting new features on Solana, which includes building your own derivative contract from scratch and being able to choose the strike you want and choose the strategy you want and pick any counterparty that you want. So we announced this morning at Token 2049 and super excited to chat about the future of DeFi innovations today.
Congratulations. Well, actually, Andrei, maybe you want to share about Siren markets.
Sure. Siren is a decentralized derivatives protocol. Currently we offer options, but very soon we will launch perps and in the future more derivative assets. We have strong belief that DeFi is the only way to build a global, trusted, fair derivatives market because regulation doesn't scale beyond a single jurisdiction, and we need a different solution to the problem that, for example, FTX had, which is smart contracts technology. The rules need to be encoded, transparent. That is the only way to build a derivatives market that is healthy, that is sustainable, and that can take us to the similar volumes that we see in TradFi. So that's what we're building. We've been on a mission to do that, and in addition to that, we are focusing on good tools for traders to basically give them, to essentially skew their chance of performing better by giving them better tools to evaluate their trading decisions.
Great. So we've got 2 DeFi derivatives trading protocols, and then we have an exchange. So Terry, could you tell us about Digital Finance Group and what you do?
Sure. So we're an investment fund, and our primary objective is really to protect and perpetuate censorship-resistant networks. And we believe that DeFi derivatives platforms are an exceptional way to develop innovation and in censorship-resistant networks. We use those platforms, we invest in those platforms, and we also own a centralized spot exchange. So we're fairly involved in the exchange space. We also previously were the largest shareholder of the first Bitcoin derivatives licensed exchange in the US. And the reason we're attracted to the derivative space is, if we think about the history of derivatives, it's a way of mitigating risk, right? We think that the DeFi derivatives platforms are a way of mitigating risk in a digital world, in a global economy, in a way that traditional markets cannot.
Yeah, we'll jump into the history and kind of the risk management side of it in a little bit, but let's just set the scene here. We know that derivatives trading is a massive component of the traditional finance space, estimated by the Bank for International Settlements to be worth over $750 trillion in notational value in 2023. But maybe we could just touch on what are the fundamental differences of crypto derivatives trading versus traditional finance trading today. So anyone can take this.
Yeah, maybe I can start. So my vision for Cega was back in 2017. I saw the crypto options market develop with the emergence of an exchange called Deribit, which is one of the centralized derivatives exchanges for crypto today that is still quite large. And at that time, I saw that Deribit was just building its company. They had a front office, which was the engineers building the platform. But for every trade, they had this really intensive middle office and back office operation. And so what I think the biggest difference between crypto and traditional finance trading is in crypto now we're leveraging these technologies like smart contracts to really abstract the middle office and back office operations to be able to make the trades more autonomous, permissionless, and accessible by anyone. And also by abstracting the operations, you make the transaction costs for each of these option trades much cheaper than what's available in traditional finance. So I think that's on the product side. And then from actually a financial product perspective, the crypto options market is actually one of the most exciting markets for a trader. And this is because in trading, and especially for market makers, you want to make money through having a good edge. And that means being able to quote asset classes in a way that is profitable. So the wider the market is, the more opportunity there is for these market makers. So in crypto, the markets are wider than traditional finance, so it's a lot more profitable for liquidity providers. And at the same time, especially for options, the volatility for crypto is much higher than traditional spots or futures. And so you're able to actually make a lot more profit using options trading. And so both from a product developer and a trader front, being in crypto options is a really, really exciting market opportunity.
Andrei, do you want to touch on the differences from your perspective of the benefits of DeFi derivatives or crypto derivatives, DeFi derivatives versus traditional finance derivatives?
Yeah, so my sort of eye-opening moment with TradFi happened when I worked for a hedge fund for 3 years between 2015 and 2017. And before that, I'm a software engineer by background. So before that, I perceived traditional finance as sort of this cool, very efficiently run, machine that no one really knows how it operates, but it's something really super technologically advanced. But I worked at a $2 billion hedge fund, and what I realized is that it's stuck in the past. The infrastructure that is used to perform, this $100 million to $300 million trades is super manual. It's literally people calling other people and manually input, things and setting CSV files to each other. So when I saw that, and then around the same time, Ethereum got created, and I instantly it was this light bulb moment that this is gonna do to finance what sort of internet did to the rest of the economy, and that it will just streamline. And I agree with Arisa in terms of just operating on the crypto rail. Right now it's a bit flimsy because the technology is very new. It takes it's inefficient, it's costly, but once the infra gets there, it will be a no-brainer to start a financial product on the crypto rail, because it will be just so much more streamlined. You will be instantly plugged in, interconnected. You will have like orders of magnitude fewer people to operate these products. They will scale very easily. There will be no manual paperwork. So to me, this is sort of like a no-brainer in terms of like overall macro view. In terms of just my personal kind of story, I've been a trader for a while, and I became profitable with options. So for me, options sort of I hold this asset dear to my heart, because this is the asset that allows me to be profitable for the several years in a row, and that's why I really want to bring it to crypto, and I want to see that market blossom in crypto just like it is in TradFi.
Terry, do you want to weigh in here?
Yeah, just very briefly, I would say that traditional derivatives or derivatives in traditional markets are tethered to traditional markets and the products in those markets: corn, oil, wheat, soybeans, so on. Whereas in crypto markets, you don't have a similar tether like that, and as a result, you have a much bigger opportunity for innovation. Thinking about perps, I don't think perpetual swaps could have ever developed in traditional markets for that reason.
That you make a really good point there, and Andrei, you're talking about the infrastructure rails for this to happen. What could each of you kind of share what needs to happen, or what components need to come together to build a healthy crypto derivatives market, which I think all of you are participating in your own way. But yeah, what do we need to have a healthy crypto derivatives market?
I mean, I could definitely start here as well. So, there's quite a few thoughts here, and as someone that is building in this space, we ask this question every day. People have talked about crypto options coming for the last 4 years, and it still hasn't come, to be honest. And the real PMF that we have seen in this market is perps. But as Terry said, it only is existent in crypto, and it's not existing TradFi. So why is that? And when you actually look at the user segment that uses perpetual swaps, you realize that it's all retail. And so we don't have the institutional volume in DeFi currently that is supporting the underlying volume of perpetuals and options. So how is this going to change? This year we had a really exciting moment, which was that the ETFs for Bitcoin and Ethereum has launched. This means we have finally become more relevant in the eyes of these institutional holders, and what we think is that on the back of the ETFs, there's going to be a lot of long-only and long-biased investments into these assets. And when there are long-only and long-biased institutional firms invested in these assets, they are going to need short-term hedges for downside market movements. And on the back of that, we believe there's going to be a massive renaissance for DeFi derivatives. And so I think the time has finally come that there's going to be this institutional inflow, and we think that there's finally going to be some interest in DeFi options and DeFi derivatives that are outside of the current retail interest.
Can I ask a follow-up question?
Sure.
Thank you. At the moment in regulated markets, at least in the US and in Europe, it's not possible to offer margin on derivatives, right? And so you're only able in crypto, so you're only able to place fully collateralized derivatives trades, which defeats the purpose, really. Do you think that the opportunity for derivatives trading remains the same if traditional markets allow for margin in crypto derivatives?
Yeah, that is such a good question. And to be honest, I think from my understanding, the user understanding is not even there yet. And I also think that when you're talking about DeFi, the focus should not just be on the US markets. And so most of the volume that we see in US, in perpetuals markets right now is not coming from the US, but rather there's a lot more focus on the Asian markets. And I think, when we look at the user insights there, it's definitely allowing margins, but I think the larger volumes are not there because even the Asian institutional investors are not actually looking into the DeFi derivatives market yet. And so I think for me, what I think is a smart play for all these DeFi platforms that are available to a global audience and not just the US is to actually focus on the markets where you don't have to go over this super complex hurdle of the regulatory landscape. And I think there are really good players in the market like Coinbase who are fighting the good fight, and they're trying to fix this margining problem. And I think once that hurdle comes over, just like how we did with the ETFs, there's going to be a renaissance that happens in the US as well.
Yeah, I would add that there are few additional structural problems that prevent decentralized derivatives from growing and from attaining the liquidity required for large institutions to participate. One of them is the smart contract risk. I think that bigger players, they still take the counterparty risk as a preferred risk over smart contract risk, because at least they can evaluate it, they can do something about it, whereas smart contract risk is sort of like this random risk that it's really hard to manage. I think, but this will change once we have platforms that are more hardened and the better primitives built. Another problem that we had is that the infra itself, underlying infra, is quite slow and inefficient, and in derivatives the latency is very important, because you to offer tighter spreads that compete with centralized markets, you want latency to be low so that there is like a little arbitrage opportunities, and I think those barriers they're not insurmountable. It's just basically we're in the early stage of this technology, and as technology evolves, all of these problems will be solved, and at the end of the day, the market will go to the venue that is more transparent, that is more predictable, and I think DeFi will be that venue at the end of the day.
Yeah. So Arisa, you hit the nail on the head there, where you're mentioning how the Bitcoin and Ethereum ETFs going live has opened up the eyes of these institutional investors, because you're saying right now DeFi derivatives trading is very much led by retail. Then Andrei, you're also highlighting that the technology still needs to develop. So we've got tech kind of still iterating and working on making this more palatable and welcoming for institutional investors. And then here we've got the awareness, and also we're here in Singapore. I think that a significant portion of the crypto market is here right now because they do see that Asia is coming in. So we have all of this happening. What else needs to happen for institutional investors and institutional players to just start getting involved with DeFi derivatives? Terry,
Sure.
Oh,
this is for
thank
you.
This is for me. Okay,
I
thank
guess.
you. I think one thing you mentioned is a really important thing for us, and I think other more institutional funds, is technology risk, and then also regulatory risk. So both of those loom large for institutions. Even if they see trading opportunities on those platforms, they're very reluctant to move into that because they don't want to do anything that's going to jeopardize their licenses, that's going to cause them problems with their shareholders. So I think as the sector matures more generally, you'll start to see more capital flows into derivatives trading platforms.
And everything Terry mentioned, plus a bull market.
Yeah.
I would also add, it's sort of like a funny thing that I like to talk about. People, oftentimes people would think that meme coins and some kind of assets that are not the real assets, that they're sort of bad to the market. I disagree with that. I remember, so I used to work at Coinbase and build an infra for the asset custody there, and we custodied Dogecoin and we custodied all these weird tokens, and oftentimes me and my coworkers would be laughing why are we investing all this time into kind of holding, storing these meaningless assets? And the thing is, the infra is the same. The infra that required to custody Dogecoin is the same infra that required to custody some real tokenized equities or to support the ETFs, right, that were open. So I think that it is very healthy, and it is completely cool to sort of start with something sort of like a toy assets, because the infra is still the same, and then once the infra is good, the real assets will come.
We're here in Singapore. I know, Arisa, you're based here, but it'd be good to kind of hear from you guys what you've been seeing on the ground, here. There's multiple conferences and side events happening. Have you heard of any, if you can just share a little snapshot of maybe some of the meetings that you've been having that you can share about the reception for DeFi derivatives trading?
Yeah, maybe I can start here. So I've been having a lot of meetings the last 4 days, and I honestly think that the DeFi derivatives market is really at the cusp of a large explosion in a good way. And why I think that is, first of all, there's been this huge growth of the perps market, both from the number of products available and also from volume. And I think that really shows that there is an appetite for derivatives trading. And then we have the ETF approval and all of the institutions being interested in it. And I think that we're really at the cusp of this large movement, and this is also because if the spot market grows, which I think towards the end of this year, and with all the election news happening in the U.S., I think there's going to be a pretty big move in one way or another. And I think when and derivatives are built on top of a spot market, and so when a spot market grows, I think there's going to be an interest for derivatives, and if there's an interest for derivatives, there's going to be an interest for options, and if there's an interest for options, there's going to be an interest for exotic options, and I think there's going to be this great flywheel of retail interest feeding into institutional interest and then back into retail interest, and I think that's really going to happen towards the end of this year and maybe beginning of next year.
Exciting. Andrei, what's been your impressions with your...
So to me, the most exciting thing really that happened recently in the market is poly market. is the race of polymarket, because people don't really think of polymarket or prediction market as like derivatives, but in a way it is sort of, it's very, very similar structurally. And the fact that the leading prediction market now is on chain, this is a very big deal, because and it's on chain not because it was like centrally mandated to be on chain, right? It's on chain because the market chose it, because that is the only way you can invest and make these bets, and knowing that you're not going to get, you know, rocked, and that the things are not going to get artificially rigged and stuff like this. So to me, this is a really super bullish sign, and I feel like this will open floodgates to further similar market, which I think derivatives is a very very similar sort of like thing. So yeah.
Yeah, I was also going to say for Polymarket, it's super interesting because now people are betting on Polymarket about the results of Polymarket. And so, I don't know if you guys have seen this. So one of the most popular Polymarket entry right now is, you know, whether Trump or Harris are going to win the U.S. election. But there is another very popular Polymarket entry right now that is saying, on this day, the percentage of Kamala winning on Polymarket will be X% or more. And if you, and people are betting on that as well. And so that is actually a second order derivative on an existing Polymarket interface, and it's one of the new utilities that we've seen in the last few weeks.
That's all good for just encouraging more people to, yeah.
Exactly, it really increases the overall volume of the market.
Yeah.
And I think that kind of, you know, retail-oriented, more accessible prediction market is actually one of the things that is impossible in traditional markets. You know, the only other way I know of where you can engage in that kind of prediction is by, you know, going to your local bookmaker, right? And there you can bet on everything. When is the Pope going to die? You know, what, you know, or what's the next name going to be? Right? You know, there's a whole host of things that you can put money on to predict.
Well, we're, as Arisa noted, we're at the cusp of a really exciting, you know, burst of, you call it the DeFi renaissance. I actually heard that on a panel today as well. And so all of you are playing a part in shaping this next generation of trading. And yeah, it's just on another level compared to traditional derivatives markets. So yeah, just to summarize and wrap up this panel, it would be good to hear from each of you. What are you excited for the future of crypto derivatives markets?
Yeah, I am so excited that DeFi is finally not getting scammy. I think there's a lot of great builders out here really trying to build the vision of DeFi, and you know, I think I'm super excited hearing about what Siren Markets is doing. I'm super excited to have met so many DeFi projects this week that I think are really newly entering the market and newly launching their product that I think will really serve the masses in the coming years. And I think, you know, especially for me, coming from an options trading background and being and building DeFi options for the last 2.5 years, I think really this growth of the market, the maturing of the market is going to lead to this growth of a capital market around DeFi derivatives. And I think seeing the capital market grow, you know, from what it was 3 years ago to now, and then 3 years in the future, it really feels like, you know, we're in the 80s, like looking at the Chicago Board of Exchange, like build from scratch to build an entire new capital market. You know, at Cega, we're very DeFi focused, so we're launching products like the Vault token market at the end of this month, where the positions that you stake on Cega can actually be traded as a second derivative. And we're super excited about this because we're trying to really expand the volume and expand the use cases of DeFi and DeFi derivatives. And so if you're interested in checking us out, we're on Cega.fi, that's our website. If you're interested in looking at our Twitter for the latest news, it's twitter.com/Cega_fi.
I would just complement that and say more maturity around the protections for retail traders. So less front running, you know, less slippage, more efficient markets.
The thing that excites me the most is that the permissionless nature of this market, where anyone can propose their solution that they think is better, that it's not centrally mandated. It's more like, oh, if you don't like how the current system works, you can just build a better one and let the market decide and let the market win. So we can sort of like propose, take a first step, build these protocols. This what Cega is building, what we're building, what many other people working in this industry are building, and that let the healthy competition decide the outcome and build the market that's fair for different participants, versus sort of like centrally mandated, heavy-handed approach, where you don't really know what's the underlying really motives that go in there. So that's the most exciting thing for me, is just sort of like, let's just all do something and let the best one win.
Amazing. In crypto, I like to say we're still early, but I was just talking to, say, the Token to Fortnite organizers, and they had 10,000 people last year. This year there's 20,000, so it's like it doubles every year, and it's just interesting. We're here in Singapore, seeing the reception of it all, so it'll be exciting to kind of watch this all unfold. And yeah, when the next bull market, whether we're in one or we're at the cusp of one, it'll be interesting to see. So yeah, can we please thank Andrei, Terry, and Arisa for their insights?